life is about the life on us and hard. I hope your kids like top ramen, and I hope you don't mind it if Aunt Thelma has to shack up with you for the next 5 years.
Dinner is served, madam.
Lovely.
Because one tiny island could be the reason families are eating straight carbs, and not the good kind, 4 nights a week by this time next month.
Well, my firm offers ninja loans. No income, no job. I just leave the income section blank if I want. Corporate doesn't care. These people just want homes, and they go with the flow.
Good for you.
Your companies don't verify.
Not because they lost their jobs, because mortgage affordability may be about to get repriced overnight. And almost nobody sees the real reason yet, not even Aunt Thelma. It's Kharg Island.
Yeah, because the truth is, no one foresaw this exact scenario.
If I know anything, and sure, that's debatable, I know that life is gonna life on you.
But life is gonna life on us whether we want it to or not. And when it does, it becomes our problem to solve. So in today's episode, we're gonna show you basically why doing nothing may be the absolute worst decision you can possibly make. Not only for you, but for the generations that come after you.
So, forewarning, if you're looking for warm, fuzzy, and safe,
Toto, I have a feeling we're not in Kansas anymore.
this is not the episode for you. This is where we put the harsh spotlight on what could happen over the next few weeks in the mortgage industry. And trust me, top ramen may be the least of your worries. Because if this escalates around Kharg Island and the Straits of Hormuz, we may not just be watching another temporary fear spike. We may be watching the market rewrite what the new normal means for your kids' kids.
Yeah, and what makes this story even wilder is that Kharg Island was once transformed into an oil utopia by an American Standard Oil descendant. What was once a symbol of energy wealth is now the eyesore and pressure point of global oil. One island, one choke point, and one decision tree that could reset mortgage affordability for generations.
The market's most expensive surprises never happen when people are ready. They happen when doing nothing feels safer than making a move. And if the third path we're about to walk through becomes reality, buyers waiting for clarity.
You've been living in a dream world, Neo. This is the world as it exists today.
Maybe stepping into an affordability world that didn't exist a month ago.
But today, we're breaking it down. Why Kharg Island matters, the 3 paths the mortgage markets are pricing right now, and why doing nothing may cost far more than buyers even realize. Because once you understand the mechanism, the next move becomes obvious.
This is Houston. Say again, please.
Houston, we have a problem.
So let's start with the piece nobody understands yet. Why one tiny island, Kharg Island, can move every mortgage in America.
Life gonna throw a bunch of life at you real fast, real hard when you least need it or expect it. Life is gonna life on you. That's just life. Okay, that's what life does. Life is probably lifing on you right now. Okay, and I want you to know you got this. This ain't the first time that life is lifed on you.
So that top ramen line may sound like dark humor, but it's already happening. Nissan Foods, the maker of Top Ramen, a college student's favorite go-to and soon-to-be an American household staple, reported a 10.5% spike in sales in the first half of 2025. That tells us something much bigger is happening inside the American household budget. Middle-income families are already trading down into instant noodles because sustained inflation is still squeezing every dollar out of their budget. That's the warning shot. So if one tiny island pushes oil fear into fresh inflation chapters, the joke from the intro becomes real life even faster. And that's why Kharg Island really matters.
Yeah, and most people still have no idea why this tiny dot in the Persian Gulf could affect the mortgage payment their family sees here at home. Because this is not just an island here. This is Iran's oil heartbeat. Roughly 90% of Iran's export crude flows through Kharg Island's loading system before every barrel still passes through the Strait of Hormuz. So the chain is simpler. Kharg Island loads the oil, Hormuz moves the oil, and the world prices the fear. Simple as that. And when the world prices that fear, mortgage rates move before buyers even know why.
And here's where this gets even crazier. America helped build that modern export artery that now sits in the front end of the most important energy choke point on Earth. And now that same island may determine whether your mortgage affordability resets for another generation.
Yeah, because the mortgage market, it just doesn't care about politics first. It cares about the mechanism. Oil volatility raises inflation expectations, and that reprices the 10-year Treasury. And Treasury volatility, that widens mortgage-backed security spreads. And lenders, they simply just widen the margins. That's how one island thousands of miles away becomes your borrower's monthly payment here in America.
So this is the real buyer question. Is this just another headline spike that fades us back towards where rates were about a month ago? Or is this the front edge of a post-COVID style new normal where the mortgage floor under mortgage rates resets structurally higher? Because if Kharg Island becomes the center of a prolonged escalation, now we're no longer talking about a one-week mortgage move. Now we're talking about a new inflation chapter. That's why the cost of waiting becomes so dangerous. So the buyers who win are not the ones who wait for certainty. They're the ones who said, lock it if you got it. Because home ownership gives you partial control over what stays fixed while the rest of your life keeps moving higher.
Yes, I'd say it's a full-scale panic. Are you having a run on the bank scare yet? Well, it's rather brutal here. We're advising our clients to put everything they've got into canned food and shotguns.
So now that we understand why one tiny island can move every mortgage in America, the next question becomes, what happens next? Because the mortgage market is now pricing 3 possible outcomes, and each one creates a very different path for mortgage rates. This is why the next 2 weeks matter so much. They determine whether this was just another fear spike or the first page of a new chapter nobody saw coming.
Yeah, outcome number 1 is still the cleanest path here. Iran reopens the strait, shipping confidence returns, oil normalizes, and inflation expectations, they cool. The 10-year Treasury retraces, spreads tighten, and mortgage rates can move back towards where they were just a month ago. This is the bounce back scenario.
Outcome number 2 is the mission complete global handoff. Washington's current view appears to be the core objective is done. The nuclear threat is neutralized. Anything beyond that risks turning a tactical win into a costly regional war. So this conflict almost had to happen to force the obvious out into the open. The U.S. is an energy exporter now. Europe, China, and the rest of the world need the strait more than we do. That shifts Hormuz from an American military burden into a global burden, sharing the problem. So now the market hears America can go home, still export energy, and let the rest of the world decide whether they want to let Iran call the shots. That's why rates can rally lower here. Not because fear disappears, because the market sees less U.S. exposure, plus less war risk, plus recession bid on bonds. That's the chess move in a room full of checkers players.
Yeah, then there's the outcome number 3. Kharg gets sabotaged. The strait stays chronically unstable. Insurance costs surge. Shipping routes get disrupted. This is where the COVID 2.0 comparison becomes real. Persistent oil and geopolitical risk widen treasury yields and mortgage spreads, creating the same kind of multi-year whiplash buyers remember from COVID. Only this time, it's in reverse. And if that happens, rates reset higher as the new baseline. That's the forever normal branch.
And this is why buyers can't afford to wait for certainty, because certainty only exists after the market has already repriced. The difference between outcome 1 and outcome 3 is not just an oil chart. It's the difference between today's payment and the payment your kids' may be still dealing with. That's why this episode matters so much.
You join us here in the City of London, literally the beating heart of the financial world. Well, all around me,
Stocks are falling, the economy is collapsing, and commodity markets are crashing, literally. So, there must be some sort of literal, metaphorical representation of the problem. Money literally running out.
That's correct, yes.
Can I ask you, where are you rushing off to?
We're putting ourselves in an Irish bank till all this is over.
Top of the morning to you.
So after everything we just walked through, segment 3 becomes the only question that really matters. What do buyers do now? Because nobody listening to this show can control Kharg Island, the Strait, or what world leaders do next. But buyers can control whether they keep floating with uncertainty or build certainty into the biggest line item in their life. That's housing.
Yeah, and the strategy starts with one simple truth. Home ownership is an optionality decision. If rates improve later, ownership gives you the refinance lever. If rates move higher and this becomes the new normal, well, ownership gives you the fixed payment lever. Either way, the buyers who act now have future moves. The buyers who wait, they have fewer choices. That's the real cost of doing nothing.
And this is why we always say, sequence creates confidence. You don't wait for the world to calm down. You create your own clarity through structure. Get fully underwritten, know your numbers, model that payment, and stress test the budget. Now the buyer is no longer reacting emotionally. Now they're executing a plan. That's the difference between positioning and permission.
Yeah, and this is where the life back mindset matters most. The markets may throw Kharg volatility, higher oil, wider spreads, and tighter affordability, even scary headlines right in your face. But the families who win don't freeze. They life back. They use the tools they have: fixed payment, refinance optionality, disciplined budgeting, and long-term ownership. That's how you solve problems before life solves it for you.
So the lesson from Kharg Island isn't really about the island. It's about understanding that the next few weeks may decide whether buyers get another window or whether it becomes the start of a completely different mortgage environment. Either way, the winners are not the buyers waiting for certainty. They're the buyers building certainty before the headline tells everyone else it was obvious. That's the real Mortgage 101 lesson.
See this? It's a mortgage bill, and this is how it gets paid. Mr. Punishment, it's Peter. Please pay my mortgage.
Damn it, Griffin.
I'm crying, Mr. Punishment. I'm crying.
I know you're crying. Act like a man.
I can't. I'm not a man. And if you don't pay it, I'm going to hurt myself and your grandchildren.
Stop threatening me.
It's not a threat if I do it. It's not a threat if I do it.
Okay, I'll pay it.
Thank you.
So the real question becomes, what is the market actually telling us right now over the next 2 weeks? Because this no longer is a clean economic data market. This is a headline market. 1 minute, bonds can be flying high on de-escalation hopes, and the next minute, we're back in the trenches on one Kharg Island headline. So, let's go into the Mortgage 101 dashboard and read the scoreboard.
Okay, Manly, here's the live board. 30-year fixed is sitting at 6.55%. The 10-year Treasury, 4.35%, while the UMBS 5% coupon is at 98.24, and the UMBS 5.5% coupon is at 100.22. The mortgage spread, a whopping 2.2%. So that spread is still elevated, which tells us the market is still embedding oil risk, volatility premium, and lender defensiveness. So yes, today's already higher rates can still look cheap if outcome 3 starts becoming more probable.
And here's the next 14-day range we're watching. Best case, mission complete, global handoff, and the straits reopen. We'll see rates kind of in the 6.35% range to 6.45% range. The middle path, no resolution, just headline chop. We're going to probably see rates to 6.45% to 6.65%. But now the worst case, Kharg escalation and strait instability. We're probably going to see 6.75% or higher, and we're going to see it fast. That's why this market can be high as a kite one day and back in the trenches the next.
So the takeaway is simple. If the payment works and the house works, lock it if you got it. Because in the next 2 weeks, this dashboard can go from relief rally to affordability shock overnight.
I need another extension on my mortgage payments.
I understand that, Mr. Simpson, but according to our computer, your credit history is not good. It says here that you've been pre-declined for every major credit card. It also says that you once grabbed a dog by the hind legs and pushed him around like a vacuum cleaner.
That was in the 3rd grade.
Well, it all goes on your permanent record. I'm sorry, but if you don't come up with that money by tomorrow, the bank is going to take your house.
Well, good luck finding it because I'm going to take the numbers off tonight.
Well, we'll look for the house with no numbers.
Then I'll take off the numbers on my neighbor's house.
So then we'll look for the house next to the house with no numbers.
All right, you'll get your money.
All right, folks, now it's time for one of our favorite segments of the show, the Mortgage 101 Buzzword Breakdown. With an episode this wild, from Top Ramen to Kharg Island, the new normal, buyers need the language translated. So producer Ryan, bring us this week's 5 buzzwords and that spicy bonus buzzword.
Oh, this one got spicy. 5 quick hitters, and yes, a bonus 6th for the boys to bring the heat. Let's go. First up today, we have chokepoint. Manly?
A choke point is where supply gets squeezed. In this case, Kharg Island loads the oil, Hormuz moves it, threaten the choke point, and mortgage rates feel it fast.
All right, buzzword 2 today is trade down. Anthony?
Trade down, yeah, that's a good one. That's when inflation forces households into cheaper choices. That's the top ramen effect we're seeing. In housing, it means smaller homes, lower price points, condos, ARMs, delayed upgrades.
All right, buzzword 3 today is new normal. Manly, tell us about it.
All right, Ryan. The new normal is when temporary pain becomes an accepted baseline. Like buyers saying 6.75% is just what life costs now, and that's what we're watching over the next few weeks.
All right, up next we have whiplash cycle. Anthony?
Whiplash cycle. So this is the COVID 2.0 reverse analogy we talked about. Short relief rallies and then fast repricing to higher again. That's the whiplash, only in reverse.
All right, buzzword 5, lock window. Manly?
The lock window is the short moment where the payment works before the next headline changes the rules. That's why we keep saying, lock it if you got it.
All right, time for the bonus buzzword, life back. Anthony?
And the bonus might be the line of the whole show. When life starts lifing at you, life back. The markets may throw volatility, higher oil, wider spreads, even scary headlines. But the families who win, they don't freeze, they life back. That's how you solve problems before it solves it for you.
Boom! That's the thesis of the whole episode. Manly, take us home.
Welcome to Wells Fargo, Mr. Sidious. Please, have a seat. How may I help you today?
I need a loan for a new Death Star.
Do you remember what happened when we lent you the money the first time?
No.
It blew up because you refused to cover that random self-destruction hole we warned you about.
So the lesson from today's episode is simple. No one can control what happens around Kharg Island over the next 2 weeks. But buyers can control whether they do nothing while the market rewrites the rules. That's why the cost of waiting may not just be a higher rate. It may be a completely different affordability world. So if the payment works and the long-term plan works, lock it if you got it.
And that's the Mortgage 101 mission. Not predicting every headline, but helping families make smart decisions before the market tells everyone else it was obvious. Because over the next 10 to 14 days, the market may move like a yo-yo. One peace rumor and we're flying. One Kharg Island headline and we're right back down. The key is making sure your housing payment still works even when the yo-yo is in motion.
And speaking of yo-yos, the yo-yo is one of the oldest toys in human history and was modernized in the 1920s by Filipino immigrant Pedro Flores before being mass-produced by Donald Duncan. So when rates feel like they're going up, down, just remember, the winners focus on the string, not just the motion. So stay tuned, because if Kharg Island becomes the next focal point, the next episode may look very different. In fact, you may not even be able to afford your light bill. So if that happens, the next episode might be coming from your neighbor's TV while you're watching from the backyard. But don't worry, we'll make sure the sound is extra loud so you don't miss a thing.
We're Anthony and Manly with the Mortgage 101 podcast. Make sure you like, follow, and subscribe, and we'll see you next week.
From the heart
Wisconsin to the waves of Hawaii. Manly and Anthony keep it real, not salesy. Breaking down rates and the truth you need to know with a little soul and a little homegrown flow. It's the Mortgage 101 podcast where real talk meets home at last. Manly's got that Midwest soul. Anthony brings that island roll when the market swings and you don't go fast. Tune in, the Mortgage 101.